Bitcoin has entered a new era. Not the retail-driven speculative boom and bust era of the past, but the post-institutional era, where the dominant market participants are no longer plebs with leverage or whales with itchy trigger fingers, but firms with balance sheets measured in billions. Institutions, public companies, pension funds, asset managers, and that changes everything. Let's break it down. So last week, nearly 80,000 Bitcoin, over $4.5 billion, were sold into the market. No Michael Saylor stepping in with a huge buy for strategy, and still, Bitcoin's price barely moved. The market absorbed it cleanly and recovered in less than 12 hours. Then yesterday, Strategy announced they bought 21,021 BTC at an average price of $117,000, funded with the proceeds of a $2.5 billion raise for the new preferred stock Stretch. Again, no price reaction, just seamless absorption. These events, which would have sent Bitcoin flying or crashing by 20% or more in years past, now barely move the needle. Why? Because Bitcoin is no longer a toy for retail speculators. It's a liquid macro asset now, with real depth, real size, and real long-term holders. That's the new market structure. We've entered what you could call the stairstep era. The days of 70% drawdowns and euphoric blow-off tops could be behind us. And what's in front of us is measured consolidation. 10% moves higher, weeks or even months of grinding sideways, and then another leg up. No fireworks, no panic, just a relentless march higher to $5 trillion, $10 trillion, gold parity, and beyond. Take a look at this chart from @MitchellHodl on X, showing the shift from Bitcoin's pre- and post-institutional eras. In the early days, Bitcoin was volatile because its holders had to sell. It was primarily dominated by retail. Miners had to cover costs, traders to lock in profits, and of course degen gamblers with 100x leverage being liquidated left and right. But now, supply is increasingly being held and purchased by parties with no plans to sell. Passive flows from pension funds, endowments, treasury allocations from public companies, ETFs with multi-billion-dollar AUM and daily inflows, you get the picture. And those public companies, they don't just buy Bitcoin, they also issue debt, equity, and derivatives, all of which act as shock absorbers for Bitcoin's price. Saylor's strategy isn't just a Bitcoin holder, it's essentially an option on Bitcoin's future. It soaks up volatility that used to slam into the spot price directly by offering cohorts who are mandated to hold certain instruments that have Bitcoin exposure. In other words, Bitcoin isn't just maturing, it's already matured to a huge degree. And people who are doomsaying and calling for a massive 80-90% crash just haven't come to grips with this yet. This is the era of stability, not explosiveness. This is the era of measured advance, not manic speculation. Bitcoin now has depth, sophistication, and staying power. The liquidity is very real, the demand is persistent, and the floor is getting higher with every institutional buyer that steps in. I'm not saying that volatility is dead, but it's no longer chaos. It's no longer this reflexive destruction. It's managed, then absorbed, and then diffused. Bitcoin is now a treasury reserve asset with global liquidity and asymmetric upside. And this is just the beginning. Mind you, Bitcoin still only represents 0.2% of the $1 quadrillion in total global asset value. If you're still sitting on the sidelines waiting for a crash, you've clearly missed this structural shift that began in January 2024. This is the new emergent base layer of the global financial system, so get used to it. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and reshare, and of course follow for more. And of course, check out Horizon. Horizon lets you stack Bitcoin using your home equity without new debt, monthly payments, interest, or term limits. You can check that out at joinhorizon.com or simply scan the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.